So we can see on the chart right here that the price was having a clear uptrend right here for a long time, because this is a daily time frame. And then after forming this big bullish candle right here, this big bullish candle, it was followed up by this small candle, and then it was followed up by a gap, and then followed by a new wave down. So the pattern formed right here with this big bullish candle, followed by the candle which formed a gap, and then this small bearish candle here is what we call the evening star pattern. So let us study more about the evening star. So the evening star pattern is a pattern that is characterized by an uptrend, that is number one, and then it is followed by a gap, then you're followed by a small tiny candle, and then we form a gap, and then followed by a big bearish candle, and then subsequent downtrend. Okay, so the evening star pattern is a pattern formed by these three candles: big bullish candle, and then followed by a tiny candle. It could be bullish or bearish, then followed by that big bearish candle. Okay, so everything you need to know about evening star is in this video. So when you look at the evening star, we are going to be studying it more, and we can see that right here we have, this is what we've been talking about. We always have a big an uptrend, that is number one, then followed by a big bullish candle, followed by a gap, then followed by a small tiny candle. In most cases it is this is a doji, and then followed by a gap, and then a big bearish candle, and then you can be able to catch the wave down. So the evening star is a three-bar pattern that can provide an early indication of a reversal from a bullish to a bearish trend. Okay, so this pattern represents a potential top, and therefore a potential signal to sell, and it has the following characteristics. So number one, under the characteristics of an evening star, is a clear uptrend. So we should have a clear uptrend, or sometimes it could be a short-term or a long-term uptrend. So for example, we are on a clear uptrend like this, and then this is the characteristic number one. Okay, and then it is followed by a big bullish candle. Like for example, here we get a big bullish candle at within that uptrend. Okay, and then we get a gap up. For example, here you can see that we have a gap on this tiny image, and then it is followed by a small bodied bullish or bearish candle, in most cases a doji, that opens above the close of the previous candle. So what we are saying is that when you see that this big bullish candle you form, okay, you form here a big bullish candle, the small candle, it could be bullish or bearish, will always open not at this same close price of this bullish candle, but slightly higher, creating a gap. Okay, creating a gap. So you'll find that that candle will come and open up, like, and then creates a gap right there. So from there we create then another gap down. After the gap down, then we form another big bearish candle. So here we form a gap down, and then we form a big bearish candle, which is then followed by a new wave down, because this is the pattern we are looking at, the evening star pattern. So what happens is that we get a big bullish candle, which shows that there is a big force in the bulls, and then we get a gap up, still forced by the big struggle from the bulls. But after forming this tiny candle, it shows indecision. Okay, it shows indecision at that level. Indecision is whereby there is equal balance between the bearishness of the market, and then the bullishness of the market. So the bears or the bulls do not control the market at that time. No one is controlling the market. So after getting the gap down, this gap down shows that the bears have taken control over the current market conditions. And then this big bullish candle confirms the pattern that now we are going down. So what we do, is we shall make our entry below this big bearish candle, okay, formed this big bearish candle, and then we expect a wave down. So now again, to repeat the characteristics, number one, it should be an uptrend. Then number two, we form a big bullish candle, and then we get a gap, and then we get a tiny candle, then a gap down, and then a big bearish candle. So this pattern is not so common, but when it is formed, it will always make big price changes. So on this chart, we are going to be trying to see if we can spot an evening star pattern. And in Forex, and you can see that this is the gold dollar chart. And then in Forex, these patterns are not so common, and they in most cases are not as perfect as in stocks. And because this video is so much of Forex, we are going to look at the pattern, but it will not look exactly as what we have been studying, though, because these patterns are rare. So when you look at the chart, number one, you shall look for an uptrend, because now here is a downtrend, okay, and then here we have a short-term uptrend, you see, and then this short-term uptrend was followed by this big bearish candle right here, and then this tiny candle, and then this big candle. If I could be able to zoom in, we would have been able to see that right here there is a slight gap, okay, and that slight gap up, slight gap down, and then we could be able to spot our pattern, which is right here. So where is the entry point? The entry point is below this big bearish candle right here. So once again, to re-say it, is that this is not a clear pattern that I should have used, but because these patterns are not so common within a Forex market, I had nothing to do but to choose this one right here. Okay, so let us look at another one in the next slide. So when we find and we make this pattern, okay, when you form this pattern, what we do is that we make our entry below the big bearish candle, this one here. We put our sell stop order and the stop loss above the tiny candle, and then we wait for catch this wave down. Okay. So once again, to re-echo, we are looking for a clear uptrend. Okay, after this clear uptrend, we get this big bullish candle, which is followed by a gap up, and then a tiny candle, which could either be bullish or bearish, and then we get a gap down. Okay, after getting the gap down, then we get a clear bearish candle, whereby we put our buy stop order, sorry, our sell stop order. It's a sell stop order because we expect the price to go down, and then a stop loss up, and then we target this new support formed right here, and you can see that the price went all down. Okay, so that is the evening star pattern. Okay, and it is a bearish reversal pattern. So it happens in an uptrend. So when it happens, we expect that we are going to get a bearish trend. So thank you so much for watching this video. I'll see you in the next one. Do not forget to subscribe to the channel for more videos like this. Bye bye.